All right, Robert, now that we're in, I guess, the full-on midst of the fall market, rates have continued to drop, which, some of our viewers who have liked and subscribed and are following us found it hard to believe that that would happen, but it is. Prices based on your projections, which we will see shortly, and based on your website, www.unclebobexplains.com, show steady prices, at least based on where you're, number crunching. Sales are popping up. So the usual sales pattern, as we're going to see very shortly, is now leaving that sort of the last couple of months or weeks or periods that we've been looking at. And so, what is the story, Robert, when it comes to buyers? Is confidence now returning? Did everybody watching this, sitting on the fence and who did not jump off it, miss a sweet spot? Or do we still have a few months left where anybody who's still contemplating can still benefit from buying at current prices? I threw a lot at you, so take it away.
Well, the answer is yes, no, no, yes, yes, and no, 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 yes, no. Okay, so that's why I suggested that we start by understanding why everything you look at the newspaper seems to be saying something opposite. Because it depends on your point of view. It depends on what you need in order for you to understand what they're saying. Remember, everything that's being said to you in the newspaper is selling something. They're either selling the mortgage broker service, they're the mortgage company, Royal Bank, whatever it is that sent the information in as a chart to the daily Gleaner or whatever it is that's putting it through, is trying to present themselves as the definitive source on investment. Don't buy real estate, buy our stable, boring investment vehicles. So everybody's up to something. So why is that? That when you read one day that prices are down in a certain segment, and then you read the next day that sales are up in a certain segment, and then you read that starts are nowhere, how can it all make sense? Well, now you know the dilemma that the Bank of Canada governor is in. He's trying to make a prediction based on a million unfathomables using a pre-programmed set of parameters that all of a sudden he's got some monkey wrench thrown in there that changes it all up. So bad news is good news. Let's look at who we're talking to and who is listening. The first set of categories and three scenarios. Okay, there we go. Now we've looked at this before, except this is set up for right now. So if you are a first-time buyer and you've got nothing to sell, then you are sitting on the sidelines trying to find a person to victimize. If you're a last-time seller with nothing to buy, you're wondering, is this one I should sell or should I wait till next year? When will it be better to sell my nest egg? I have to live on that money for the rest of my life. I only have one time chance to sell this thing. Then what about if you're a buy and sell customer? You're in a semi and you want to go to a detached. You're in a nice detached and you want to go to a condo. You're in a house with no backyard and you want to find something with more land. What are you doing? Well, you're looking and not finding because everybody wants too much money for what you think, and nobody's giving you a very good estimate on what you're selling yours for. So you're doing sort of nothing, but you're doing everything. Now, investor, if you're underwater, if you sold today, you are scratching your head really hard because interest rates are not coming down the way they were supposed to. You've got everything on a variable rate. You're trying to get your rates down to your costs down to as low as possible. The tenant just moved out. The tenant wants to pay less coming in. You are in a conundrum that you never expected when you bought this thing 15 years ago, or even 5 years ago, whenever you bought it. Investor in the money. Now he's the guy from 15 years ago. He or she is probably sitting there saying, well, let's see what happens. So you got nobody who's in a hurry. So based on which one of those categories you're in, not in a hurry, what's going to happen next? So I say number A, best case for the seller is that prices stabilize at 82.5% of the peak. Now the peak was $1.334544 million in February of 2022. Okay, so 82% of that is 1.101, which is right now. Rates at 4 to 5% for a 5-year fix. Now, the 5-year fixed is being sticky. It's as low as you're going to find in the 1, 2, 3s, but it should be lower. The variable is way too high. They're playing with you. They're playing with you, okay? They know what you need. You want low rates, but they're not giving it to you. Now, the C is the best case for buyers where prices cascade down another 20%, which would mean that the average price in Toronto is 835. So from, well, 37% is 37%. And rates falling to 2.5 to 3.5, which means there's been a catastrophe of bad things that have happened this is just for next year, that brought prices down. Everybody says prices are too high. So this is bringing prices down and interest rates down to where they were, let's say about 2018, 2017, before the government intervened all of a sudden at one time and made everything go bluey. Remember that? Anyway, so the muddy middle, then we don't know what it's going to be. If prices are going to go down, they might not. And where are interest rates going to go? They might go down, they might go down. So because I can't be definite about it, how can you possibly be definite about it? And how can any of these pundits or daily prognosticators in the newspaper be definite about it? They don't know because it's an unknown territory. This is 2007 part 2.
Okay, well, here's something I want to throw at you, Robert, because we have a lot of comments, and of course we appreciate the comments, and we look at the discussions that are going up on our videos, and you got the same comments that 5 years ago, 10 years ago, 20 years ago are probably the same, which is prices are still too high. If I was like, I'm a first-time buyer, I'm still saving up, I'm going to keep on waiting. So that's one of the schools of thoughts. Second school of thought is also related to the economy, unemployment, the prospect and the gloom and doom outlook, which is there's no sense or there's no reason why these rates should be dropping, but in fact the reason why rates are dropping is to address the fact that there needs to be a bit of a jolt in the economy to happen. So why would people be buying now despite rates dropping? Yet at the same time, I guess on the flip side, what we see is, unlike previous months where we've been talking about the same thing over and over, and we've been anticipating all of this happening over and over, we're actually seeing market activity start to pick up. So I guess that goes into your sales here. What would you say, Robert, is the reason for this? And this is based on October 31, the Toronto Regional Real Estate Board, or PropTex, whatever they're going to be called next. Those stats are coming out in a few days, so we'll do a follow-up episode on this. But right now, we're looking at, according to Robert's projections, the 19th past October. So what do you have to say about that?
Okay, well, this is one of the two things that are going to happen to jolt every one of those 5 categories out of their current complacency. What we have to see is the sales hit the average, okay? Now, we are about 15, 19% below the average still, even though we're way higher than we were. It was 30% off, but nothing is astounding. The only thing that's astounding is that with sales at this subdued level, prices are still maintaining. Now, we're going to see that when their calculation comes through of what actually sold all over 905, what actually sold all over 416, what actually sold in condos in both areas, what actually sold in freeholds. What is that whole number of units at the prices that they sold for going to translate into? We leave that to the end because we're all guessing about what that's going to be. Nobody has maintained a number on that, and you can't do it. So this sales chart is very good. It's very good. We're 41% better than we were last year. Okay. Now, it's still below average for October, but it's much better. So when people see this number come out of the TREB in 7 or 9 days, whenever it is, it's going to change their attitude. Just like if all of a sudden prices went up by 10%, they'd say, oh, I missed it. I better do something about it and try and get in on the second legs of the upswing. Right now, people are shrewdly going around saying who needs to sell the worst, and they're plucking off the best deal in every category, in every type, in every neighborhood, all over the place. This is the cheapest price in this school district. This is the cheapest price of this neighborhood. I know I have to renovate it, so I don't mind paying for a rough one as long as I get to do. I'm not paying for anybody else's extras. So it's what's going to knock people out of the doldrums. Right now, they're waiting for the election. What's Canadian election going to do? What's Ontario budget going to do? What's this $200 that he's going to say? Everything is up in the air. If you just watch the news for 3 days in a row, you're completely confused. So what does Joe Public that you're talking about? We talk about it in that can't seem to know what to do. We talk about 5 categories. Each one of those categories has different needs and wants and is going to do something different. However, what's going to move the market as a whole? Sales hitting the average, prices moving by maybe 5% would be enough, either year over year or month over month. Now, this is a look at it a little more detailed. The first half of the month saw sales at 271 per day, if I can read that small. In the second half, it was nearly 300. So it's like 20%. There's momentum building. The second half of October, all that says the second half of October was better than the first half, and that's pretty good for October. One of these days, like we had warm weather, who knows? One of these days we're going to get snow. November the 11th, we had snow one of these times. So all these things contribute to what happens in the real estate market, the school year and the weather. These are the things that affect our cyclical seasonal market. So
Robert, before we go into the
yeah,
analysis of the active inventory, uh, was there a reason you think, or what is the reason you think, or what would you attribute to September not being as quick of an uptick as usual? Or is that just the new normal or the way it has been? Like usually we see in the fall, kids go back to school, Labor Day weekend is done, sales start to pick up. Why did it have to happen mid-October before we started to see this bounce back?
well, I'm only going to say that it's a lag, and I've said that 4 times now, because what's normal is got nothing to do with what happened this year. Normal is only an average of what happened in the last 20. So for September to be slower, like they had a huge inventory, people weren't in the mood, interest rates were still anticipated to drop. So as each one of these increments is either satisfied or not satisfied by the sideline stander, and he says, okay, I'm going to move. Okay, I'm not going to move. Okay, I'm going to move. When you make a decision, yes or no? So we still have lots of inventory with a wide variety of price range for the exact same thing. I say it's a 25% variation between the exact same thing, the exact same street, because of the needs and wants and desires and motivations of the person selling it. That's why there's such a big difference. Somebody's owned it for 15 years, somebody's owned it for 15 minutes, and they're trying to turn it over, or, well, I put a lot of money into my garden here and I'd like to get it back. Each person is different. And that's what each one of these sales adds up to. What we're seeing is gradually an increased number of sales is eating into inventory. Now, as the end of every month comes along, a certain number of terminated, some number expires, and so the rate goes down, the number goes down a little bit. But what we're seeing gloriously now is that the number of months of inventory, the ratio of between the number of sales and the number of listings is now below 4. I did it again this morning and it's 366. So it's down from 5 and change where it was just last month. So I don't know whether that's answering your question about September, but September had to turn around from August, and nothing, it's like turning around an ocean liner. How do
So I
you
guess
do it?
as we're
Slow.
seeing live here, and as we're continuously analyzing this, we're continuously seeing where the pivot point is happening, and it could be fair to say that we saw a significant change in October, and it is significant. I mean, what this is telling you, as Robert pointed out, with the months of active inventory, it's telling you that people that buyers are buying, and these are stats. I mean, you can't really make this stuff up. It's not theoretical. Like this is actually happening, at least at this point in time.
Well, no, these are okay. So here's our graphic of now. The only reason for showing this is to say what was happening at these times when interest rates, this is the bank rate, were under 1%. Terrible, horrible, you never want to go there again. Circumstances were happening then. So throw that out. You never want that to happen. Our bank rate should never have been below 2%. Never, 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 never. All of the problems we're having now with price are based on this extended period of time from 08 through 22 when interest rates were down way too low. I can remember saying at the time, if you can borrow money at less than 2% and inflation is less than 2%, you are borrowing free money. So you might as well borrow as much as you can. And especially the last little while during the COVID lockdown crazy times, it was just you were constrained from doing so many things. You were able to do this. People are still able to build houses. People are able to contract for Valhalla, and it just went nuts. So prices went out of line because the interest rates were too low. We're never going to see this 3.75 go down to 2.7 to 2.75, 1.75. And if it does, you don't want to live there. It's going to be a terrible disaster again. Nobody wants that.
And let's look at price because this is something that you're projecting. These are not the official numbers. This is based on Robert's
No, this is a
calculations.
guess. This is a guess. And if we have interest rates, if we have the market behave in the same way as it has most of the last time, and prices go up by 1.67% over last month's increase, which will be almost the same as a year ago, minus 0.01, that's almost nothing. We're still going to have the second or third best October in history. And as I said last time, you can see them all clumped together there, 21, 22, 23, 24. They're all pretty darn close. And we're following the same trend going towards winter. Now, winter is quiet, and then we're going to move into spring before you know it. So I'll be amazed and delighted, like everybody else, to find out what the average price is, but it's still going to be over $1 million. It's still going to be over 1.1. And so the people who are waiting for prices to crash down by another 10% or another 20% are also waiting for a calamity to occur around the world or in Canada. And I don't think they're really wanting that. What they are wanting is to satisfy their own need of lower prices. So the next best thing is lower interest rates, and you are going to get that.
Oh, let's revisit the peak. So I mean, I know it's futile to project this, but 2, 3, 5 years before we hit this again, you think?
Well, eventually you're going to see that. And if they decide that they're going to reflate the economy and let every income go up by 5% a year and every price go up by 5% a year and everything just inflate out of the problem that they have. Like everybody's now talking about government debt. They haven't talked about government debt for 10 years, but it's been just as terrible the whole time, building up, building up. But now as interest rates went up and the reporting of what used to happen 6 months and 12 months ago, the cost of public debt charges becomes a real squish on the government budget. They have to tax so much just to pay the interest on the public debt charges. So like there's certain school of thought that says the reflation is the only solution to the debt problem, that you can't just pay with 1 or 2 Bitcoins and pay off the national debt. You've got this huge component of the budget called debt charges. So will we ever get back to 1.3? Yes, but the value of the Canadian dollar will be so diminished. We'll all be making so much more nominal money that, if the school teacher's making $200,000 a year, then 1.133 will be nothing. It's how much are you making? And so this is the calculation, the back sheet that went behind the calculation of what we'll find out for sure next week.
All right, conclusion, Robert. Is there still opportunity for buyers to buy? Should real estate haters accept the fact that, look, this is the reality, prices are just going to keep moving steady along, or will they still be right because some calamity might happen over the next few months that's unheard of, and all of a sudden prices will go down and still will not be affordable for the first-time buyers who are still waiting? What's going to
Okay,
happen?
well, vulture investors will go bargain shopping. Okay, so if you are all prepared to buy something, then you can pounce on somebody. Remember, you're not buying 15 houses. You're not buying 1,538 houses. You're not buying 6,500. You're buying one. You're not buying a market index. You're buying one. And that's what you want to do. Then you look for someone who's the most earnest seller that you can find in the neighborhood, the price range. And then you put an offer in that's, less than what he's expecting. That's the only way you're going to beat the market. And if you're not doing that, if you're just sitting around telling everybody, "Oh, I'm waiting the prices come down," you're just fooling yourself. Because one day you will find out that prices have gone up and that interest rates are plateaued and that sales are churning up and eating up all the inventory that you thought was your insulation, your safety valve. So don't be too smart. You're only buying one house. You're only selling one. So that's why I started with the categories of who are you and what do you need and what do you reasonably think is going to happen in the next year? Can you guess beyond a year? No. Bank of Canada can't guess beyond 3 months. How can you guess beyond a year? Now, if you can stand where you are, or if you think what you have is great, but if you want to move out, I have a customer now. He's got a fabulous big house, 4,000 square feet, fully finished basement, everything you could ever want in it, triple garage. He wants to move to a condo because he wants to travel all the time. He wants to have not have the hassle and responsibility of this huge big house that his kids are going, they're rattling around in. So everybody has a different need. Everybody can say, "Oh, I wish it was him," but we're not him. We're somebody else. We have a different need. And if you don't like what you want, what you're living in, then you got to do something.
Well, one of you might want to buy that triple car garage house. So if you're interested and if you want to jump off the fence and you're confident enough and you realize that this is a sweet spot, reach out to Robert Eade, www.unclebobexplains.com. And if you don't, watch our next episodes as you'll watch prices remain steady and slowly go up and hopefully things get better, right? Leave in the comments what you thought about this episode. Reach out to Robert and ask any questions if you have need any real estate advice. Thanks for watching this episode of Real Estate Chat. Take care and bye for now.
See you later.